Hey everyone, this is Cody with Rent Reporters, and this is how you build your credit without any credit cards involved, not even a secured credit card. Plus, we'll go over the one thing you should never do when you want to build your credit from scratch. Now, before we get started, two things. Number one, don't forget to like and subscribe to our channel for more videos like this every week. And real number one, I am not going to include things like car payments and student loans. If you have them, they count towards your credit, but you shouldn't take out a student loan or buy a car just to build your credit. That just doesn't make any sense. And number two, I want to take the time to highlight a major difference between your credit score and your credit history. Your score is a nice, simple number that sums up how well you manage your credit. However, your score is not the only thing that lenders will look at. In fact, just about any time you go to apply for a line of credit, you'll see a line that says something along the lines of, a credit score is just a portion of the information a lender will need. While it is usually a primary factor, it's likely not the only factor that will determine if your application is approved or not. The lender is going to look at your entire credit history, not just the score, because it's possible to have a really high credit score but a very thin credit history. For example, if you have a single credit card with a small limit that you use and pay off completely, you'll probably have a high score. But because you only have one card and a small limit, your credit history is considered thin. When this is the case, you may still be denied new cards or loans until you build up your credit history. So let's get into the list. Coming in at number one on our list is to make sure that your rent is reported to the credit bureaus by signing up with Rent Reporters. Rent is probably your biggest expense, but it doesn't count towards your credit score and it's not reported on your credit history. With Rent Reporters, we report your on-time payment history to the credit bureaus, and this gives your score a nice boost. Our customers typically see an average 40-point increase. It's just $9.95 per month to keep your payments up to date with the bureaus, plus a one-time sign-up fee, and this investment can pay off big when you get to qualify for lower interest rates and access to better financial products. So get started on that right after you finish this video. Next up is to become an authorized user on someone else's credit card. If you have a friend, a family member, a spouse with a credit card, you can become an authorized user. Now this means that the bank will issue a credit card with your name on it that is connected to their account. When they use their credit card and pay it off, it shows on your credit report as well. Now, of course, this goes the other way too. If they aren't responsible with their credit card, it can hurt your score just like it'll hurt theirs. So make sure you trust this person before doing anything. Make sure to also let the person know that if it is a cause for concern, you don't need to actually have the credit card from them. They can hang on to the card. You never need to use it. You just want to be on the account. So coming in at number three is, just like Rent Reporters can report your rent payments to the bureaus, Experian Boost can report your utility bills and subscription services. Boost is a completely free service and it's super easy to use. You just connect your bank account to it and identify the subscription and utility bill payments. Boost then takes care of the rest, assuming that you continue to pay your stuff on time. The average user will see a 13-point boost on their score. Next up, try using a peer-to-peer loan company. Now again, let's be clear here. You should never go into debt for the sake of building your credit. That's just a bad idea. But if you need to spend money on something and it makes sense to finance it, a peer-to-peer loan might not be a bad idea. These loans are financed directly by individual investors rather than banks. You can sort of think of it like a Kickstarter that you have to pay back, and they tend to be a little easier to get approvals. The trade-off, though, is that you might pay a higher interest rate, so be sure to make sure that your rate isn't too high before signing up. Good use cases for peer-to-peer loans are for any loans or leases where you would normally pay interest, like home improvement repairs and upgrades, car repairs that you don't have the cash for, or business loans. You do not want to use these types of loans where financing is typically free, like a cell phone. Coming up next at number 5 are credit builder loans. Now, there's another option that I think is a little cooler coming up next, but credit builder loans definitely do have their purpose, so let's go over those. Credit builder loans are almost like a forced savings account that gets reported to the credit bureaus. The way this works is you apply for a loan, but instead of receiving that money and then paying it back over time, you instead begin making monthly payments towards that loan that gets held in an account for you. Once you make the final payment, the loan balance is then released for you to withdraw. You cannot withdraw money from this account until the loan is completely paid off. Now, these can definitely be useful, but they do have some drawbacks. On the plus side, they're easy to qualify for. Approvals are typically based on income. You also don't need to pay anything up front like you would with a secured credit card, and you can also see upwards of a 60-point or higher boost in a very short period of time. The drawback is that you'll have to pay interest for someone to hang on to your own money, which is why I like the next option much better. But using the calculator provided by credit builder loan provider Self, if you pay their minimum commitment of $25 per month, you will pay a total of $600 over the course of 24 months. But you will only receive $520 after your final payment gets made. Because you can see such a high boost in a short period of time, you can qualify for better rates to refinance other loans that you might have, like your car payment. So the cost of this can definitely pay for itself in a very short period of time. But you really shouldn't look at something like this as a way to make yourself save money if you have trouble doing that. You should really only consider this type of loan if you cannot qualify for anything else, or if you need a big credit boost in a short period of time without any upfront money. At number 6 are lending circles. Now, basically the way a lending circle works is you sign up and apply for the loan. If you get approved, you will join a small group of people, about 6 to 12, who need a similar amount of money as you. Each of you is then obligated to contribute a small amount of money each month. The monthly payment from each member funds a loan, which then gets distributed to one individual member who then starts the process of paying it back. As the loans get paid back, not only are the payments reported to credit bureaus as an installment loan, which boosts your credit quite nicely, the payments go back to the members in the group, so you all get to recoup your investment. The process then repeats the next month for the next person in line until all members of the group have received their loan. By the time the last person receives their loan, the first person should be completely paid up, and by the time the last person has paid off their loan, every member in the group should have received their investment back. Not only is this a really cool community building concept, the loans are typically low interest or interest free. And finally, at number 7, this last option only applies if you came to the United States from another country. Now, normally the credit that you built up in another country doesn't count towards your credit when you arrive to the US. However, many international banks with a presence in the United States offer their members services that will report your payments to the United States credit bureaus to help establish your credit. Now, I know that I said no credit cards involved at the beginning of the video, but as an additional added bonus for any new arrivals to the country, you actually do have a couple of other options. Other companies like Nova Credit will basically translate your credit history from your country into a credit score in this country and help you qualify for American credit cards. Another option would be the Jasper credit card, who uses alternative data to help you qualify for credit. If you're a new arrival to the US with a job offer, this alternative data can actually be good enough to qualify for a Jasper card, making this a very attractive offer for new arrivals to the country. So what is the one thing that you do not want to do? You do not want to use payday loans. Not only are the interest rates typically incredibly high, the payments are also not usually reported to credit bureaus. If you're late, however, oftentimes because you can't pay back the extremely high interest rate, then you will go to collections and that will be reported on your credit. They're just a bad idea all around, and there are so many other financial products out there that are much better alternatives than payday loans. And that's it. 7 ways you can build your credit without any credit cards involved. If you have any others to share, please leave them in the comments below, and don't forget to like and subscribe. Until next time, this is Cody with Rent Reporters, and I will see you in our next video.